Hello everybody and welcome to the market briefing for the week of October 17th. Let's dig right in here. Everything we do here is for educational purposes only. We are not investment advisors, do not provide investment advice. All trading and investment decisions are your own and done at your own risk. So hey, go smash that like button and then we can move on. We'll take a look at what's going on this week. Let's start with the earnings. It's, as you can see now, a busy week for earnings. Earnings season has officially begun, so this is always a fun time for traders and a very interesting time for investors. I'm sure there are plenty of companies on this list in front of you that are in your portfolio. So let's quickly go through some of the highlights here. We've got more banks on Monday morning. Bank of America, Charles Schwab, they'll be closely watched. Not a whole lot going on Monday afternoon. Rio Tinto is a big mining company that will be closely watched, but probably doesn't move the market. Potentially moving the market, though, is Goldman Sachs on Tuesday before the open. Also, Johnson & Johnson on Tuesday morning. Very important consumer staples company. And then we've got Lockheed Martin, big company in the industrial sector, on Tuesday morning as well. After the close on Tuesday, Netflix. Be watching this really closely. Maybe, if they have half-decent earnings, maybe this is what we need to see to get them out of that consolidation that we've been talking about for months now. And get into that gap, and we'll take a look at the Netflix chart in a little bit, but get back into that gap and start closing that gap. We've also got I think the first of the airlines, United Airlines, also on Tuesday after the close, so that will no doubt affect all of the other airlines, perhaps even some of the cruise lines, depending on their guidance. ASML is the largest maker of semiconductor making equipment, and they report before the open on Wednesday. Procter & Gamble, another really big consumer staples company, is reporting on Wednesday morning as well. And you can see we've got some other kind of second tier names through the week, really. The big one, the great big one of the week, and this will no doubt move markets. Tesla on Wednesday after the close. We will be looking at this chart later too. I think that these earnings are do or die for Tesla on Wednesday. And you'll see why when we take a look at the chart. I don't think anybody follows IBM anymore. I don't know why they've put them so high on the list. Research, maybe, Alcoa. There's been some good movement in steel and aluminum over the last, couple of months. So Alcoa might be fairly closely watched. And then we've got, Las Vegas Sands. The casinos have been up and down all over the place. So that could be interesting as well. On Thursday morning, AT&T, another airline, American Airlines, some second-tier names. We've got another big one. There's always a lot of movement in Snap when they report earnings. So this could be a fun trader for people, if you're so inclined to be trading after hours, and that's on Thursday. And one of the big railroads on Thursday after hours as well. Then on Friday, I don't think anybody cares about Verizon or American Express anymore, but Schlumberger is a big oil services company. That will probably be fairly closely watched. So as you can see, we've got a lot of exciting stuff coming up for earnings. So it's a fairly big week. I believe there's about 300 companies reporting this week. Next week will be even bigger, and next week will be a lot more of those FAANG names you're used to seeing will be coming up very soon. All right, so on the economic calendar, it's actually pretty light this week. Nothing really intense coming up this week. It is a fairly big week for housing, but that's about it. So on Monday, we have the Empire State Manufacturing Index. That's kind of a second level inflationary measure, so it'll be watched a little bit. And then all week long we have this the China Communist Party Congress. It's a big meeting of the Chinese Communist Party. There's lots of changes of leadership and leadership of committees and everything within the party that goes on at this meeting. And normally, now President Xi is the leader of the Communist Party. He has served 2 terms, and it has been traditional for the leader to step down after serving 2 terms. The consensus is that he will not be doing that, and he will be appointed to an unprecedented 3rd term. So there's the potential, even though it's just a very low probability that he is not appointed to a 3rd term. It could happen. We don't really know what's going on inside there, right? And I'm of the opinion anything could happen. And there could be other changes within the party, that could shake things up. So this is going on all week long. So we should watch for that, because there could be market moving events that come out of this. So that's why I've put it on the list here. So on Tuesday we have the NAHB Housing Market Index. On Wednesday we have building permits and housing starts. On Thursday we have the Philly Fed Manufacturing Index, another kind of secondary inflation measure there. We have existing home sales. This existing home sales is probably one of the most important ones, to tell us how the housing market is doing. How real estate is doing, or at least housing real estate is doing. And so with this, we're kind of wanting to see some slowdown and some price pullback in the housing market, because that is our big concern for inflation right now. And of course, always on Thursdays we have unemployment claims. Nothing going on Friday, except, and I just threw in here that the CCP Congress ends on Friday. So that is our week in macro. We're going to take a look now at the markets. We'll start with the major indices. We'll look at some important commodities. We'll look at some sectors, and we'll see if there's any nice setups. And there are not. This is kind of we're setting up, at least on Monday, as a wait and see. Monday morning is definitely a sit on your hands. See what's going to happen. How is the market going to react to what's happened over the last couple of days? So why don't we dig in here and look at the S&P 500. Just need to bring this up. Here we go. Okay, so as I'm sure you all know, we had this giant reversal day on Thursday. I believe 5th largest reversal off a 52-week low in history. So huge. We gapped down huge on that CPI number, that bad CPI number, and immediately turned around and went right back up again. Now this orange line here is the 200-week moving average. I wanted to put that on. Normally it would be on my daily or my weekly chart if I switch to that, but I thought it was important to put it on the chart because I know a lot of people are watching it. And it acted as support for a couple of days. We broke through, immediately turned around. That's kind of what you want to see out of an important moving average, that everybody is watching. After a reversal like that, we would expect to see continuation. It was a huge reversal. Now, granted, this reversal, no doubt, was mostly short covering. But bulls should have come in there and started buying this up, and they should have come in the following day and started buying that up. And you can see that we gapped up a little bit on Friday, but then they just sold it the rest of the day. We did find support where we should have, but that wasn't until the end of the day, right? So this is why I think this is wait and see right now, because this really could go either way, in my opinion. But one of the things I wanted to show you first, before we get a little further into this story that these two candles are telling us, is why do we bounce here? Why do we bounce at what is this? Around 348. it's kind of hanging out in space. There's really no, support levels that come from the past. You can see the support level down around 342, and anytime I see that, I kind of wonder, what's at this level? Why did it bounce? And then I realized or remembered that I had kind of drawn in this head and shoulders pattern quite some time ago, and I sort of discounted it because it's not very symmetrical, and I wasn't entirely sure it was going to play out. So let me draw that back in. I'll put that back in here. So you can see here, this head and shoulder patterns, and they're a lot better when they're symmetrical, but it's, it is clearly there. There is definitely a head and shoulders, and the neckline on that head and shoulders is in an area of minor support that this head and shoulders then created, sort of major support out of. So we've got that neckline right there. Okay, so what happens when we measure that? Because as I'm sure you all know, we measure from the top of the head down to the neckline, and then we transfer that measurement down from where it breaks down. And look what we get for a target. It is almost to the penny on this low. And I found this really interesting, and so this makes this level here really important. If we're going to come down, if we continue down on Monday, we really need to hold this level, and we have good reasons to hold it now. And the important thing is, when you have a big reversal, the important thing is what happens over the next few days. Now, obviously, we gave a bunch back on Friday. That's not good at all. But if we can turn this around, and ideally, if we can even turn it around without a test down here, maybe, even if we gap down a little bit and then turned, if some buying momentum comes in here, and if we had, say, a big green day and we were able to close above the high of Friday and above this resistance right here, I think that would be huge. I think that would be very bullish and something we should probably be buying, although this is not investment advice. But, if you were going to jump in feet first into this market, strong green momentum on Monday would definitely be something to buy. You can see we've had that RSI divergence down here. That is still intact, although under threat. And I suspect that if we do break down below the low of Thursday, that RSI divergence will be gone. So really important that we hold this level, over the next few days. Otherwise, we're going down further. We're going down at 342 for sure, without a doubt. And then beyond that, it starts getting really ugly. There is some dead air in here. And I really don't think the next strong support is in the 322 to say 325 area. If we start cracking down, so got to hold here, have potential to hold, and if we can get some upside momentum, I think that upside momentum will be really strong. So I'm on the fence with this, and I'm going to sit and I'm going to wait and I'm going to see what happens. But I'm also not going to be afraid to jump in if it looks like buyers are going to take control of this. All right, let's take a look at the Qs. It looks, it's going to look almost exactly the same in the Qs. We had that big down day, the big up day followed by a big down day, and we are, trying to hold some support there. It's important we hold these support levels again. But that's kind of where we're at with that. IWM looks a little bit healthier. We came down, and you can see that IWM on that gap down on Thursday came down, tagged that June low, and bounced right off it. Came up. I guess this gap is completely filled now. We'll get rid of that gap there. Came up in a resistance, gapped above that resistance on Friday, and then kind of fell apart. So again, same deal here. This has got to hold. This level down here at around 163 has got to hold. That Thursday low. This needs to turn around and start going up. The volatility index actually should give us reasons for hope. This did not spike up on Friday as we were coming down, so that is quite interesting. bit of a divergence there, right? I mean, we've got this indecisive doji sitting here on Friday. On a day that was very weak. You know, the market was down, and you know, from 2 to 3%, and volatility was only up 0.25%. So that's quite interesting. So this is something I'll be watching closely on Monday morning to see what's happening with volatility. If volatility sort of continues to diverge from price, that will give me, or you know, continues to diverge, you know, to the downside. That would definitely get close to convincing me that we could see a rally on Monday or Tuesday. The 10-year yield, that continues to go higher, but very, very slowly. You can see there's a couple of green bars there, but they're being rejected by that previous high, by this pivot. Let's just zoom in a little bit here. Also, that that former uptrend line, right? Can't get through that either. Got rejected in here nicely. Would like to see some more rejection, and kind of maybe a bigger red candle in here on Monday would be really nice to see. Another sign that I'll be looking for me to flip to bullish on Monday would be this going red. So that's the 10-year yield. Let's take a look at our dollar index. That is DXY. Okay, here's the dollar index. You can see that the dollar had a red day on Thursday and a green day on Friday. A little bit of indecisive action here. If these colors were reversed, I'd almost maybe call that a tweezer's top. But I don't like how, Friday's was green. Again, just like with the 10-year yield, we want to see this roll over here. And it would be great because, if it did roll over here, if we could, start coming down in here, well, what would that do? That would put in a lower high, right? Which, would be great to see. If we could actually turn this into a lower high. To do that, confirm this as a lower high, we need to make a lower low. We've got to come and undercut this support level here and this swing low. But yeah, there's potential here for this to roll over. I'd say the odds are against it with that big green candle on Friday. Odds are sort of against that, and we may see this continue up to that all-time high again. All right, so that is, while we're here, let's take a look at our DCA timing tool. Obviously, this is still in the red zone. The dollar cost averaging system is turned off right now, and it's going to take some work before it turns back on again. You can see that the MACD line is well below the signal line. It's going to take quite a bit to get that turned back up. We've also got that 20-week moving average is quite a ways overhead. So this is probably going to be switched off for a few more weeks. If we get a major reversal in the indices this week, maybe you could just nibble a tiny bit on your indices, certainly in some individual stocks, but this tool is telling us hands off right now. And it'll be the same for the Qs and for IWM as well. The Qs are a little closer. If it did start to turn up, the Qs will probably turn green on the dollar cost averaging before the SPY. And IWM, I suspect, is probably in even better shape. Yes, it is. IWM would be the first one to turn green again. Those small caps have been outperforming large caps for a while now. So that's something to be aware of as well. All right, let's move on to gold. I don't think there's anything going on in gold, but we'll take a quick look at it anyway. Okay. Yeah, gold, you can see gold had a nasty day on Friday, kind of fell apart a little bit. It's below that major support level. Had tried to put in a higher low there, but, now we've got a bit of a double bottom. We've got, a two-bar bottom here. Does it turn up or does it come down and test this low here? Looks to me like it's going to continue to the downside. Silver is really falling apart. You know, we were watching this because it was showing relative strength. We had the giant green candle not long ago. And, you know, ever since, really, it's just completely fallen apart. And it looks like it's going to be coming in and testing these lows. But, you know, there should be some support here. We've got a number of touches at this level at, what is that, 18. So, might find support, maybe. The RSI is looking pretty weak, though. Okay, copper's trying to hang in. You know, it's got a bit of a downward channel here, but on its last kind of swing down, the last swing down didn't last long, and it's, you know, developing a pretty decent support level in here, and tried to turn up on Friday before getting rejected right off the top of that channel. So this is pretty interesting in here. If you know, actually, this might be one of the best setups that I've seen, you know, for early in the week. Because this is a pretty decent consolidation. These are easy levels for people to spot. And if we start moving up from here, we could actually get a fairly strong move up into here. So you know, a way to play that might be something like FCX Freeport McMoran. Yeah, that doesn't. I don't like the look of this chart as much. So yeah, it's a tough call on that one. All right, let's go to DBC, the General Commodities Index. You can see that did make a nice move up. It's kind of rolled over a little bit, but it's hanging in fairly nicely. That downtrend line is now acting as support, so that's nice to see. We've got a little gap just below here. So if it gets into that gap, it could move quickly down into that support level. But so far, we are finding some support. There is hope for this to turn to the upside, and also this week, the agricultural commodities. You can see we've been watching this, you know, this bear flag that they've been in. You can see we cracked down out of there on Thursday, went right back up into that flag. And on Friday, we came down out of there again. So this has been really indecisive in this, but it does look like there's going to be more downside and a potential test of this target here in around 1930. Crude oil. So crude oil's had a bit of a pullback. So it's had a volatile few days. It is being supported by a support line and by the downtrend line so far. That was a nasty red candle on Friday, though. So, you know, the jury is out on this one. Natural gas. Natural gas still in that downsloping channel, you know, downsloping bear flag. We expect to see that break to the upside, holding really nicely at this support level too. So again, just wait and see on this one. You don't want to be playing around in a tight range like that. XLE, the oil companies, the energy sector ETF. This is looking healthier than oil, which is good. You know, if we're playing these stocks, we definitely want to see these looking healthier than oil. You know, this often leads oil. So if people are bullish on the company still, then we should probably be bullish on oil. This is a nice consolidation. It's gotten a little volatile here, but still a nice consolidation right under resistance. You know, this is primed to break out to the upside. XOP, the oil exploration and production companies, pretty much the same thing here. You know, still consolidating nicely. You know, just needs to probably a little bit more time, a few more days, build some strength, break out to the upside. And pretty much the same thing goes for the oil services ETF. You know, all three of these look pretty much the same. TAN, the solar ETF, kind of ugly. Broke through a relatively important support level, tried to break down out of this downward channel. You know, this sort of downtrend got steeper over the last week and a half. But we had that really nice reversal with the market on Thursday and the ugly reversal again on Friday. So, again, got to kind of wait and see where this one's going to go. First Solar, of course, is the leader in this space, and we've been watching that consolidation up at highs, and you can see that on Friday we dropped down right out of that consolidation and couldn't even get back up in it on Friday or on Thursday or Friday. Couldn't get back in, and this is really threatening to roll right over here. And if we break this 120 level, and in the low from Thursday here, I think we could see some really quick downside. I think it'd easily drop, in a day, to this 110 level, because I really think this would freak people out if it broke that 120. And if it came down into the 110 to 112 area here, it could easily keep going. Be careful in this one. If you're in this, be really, really careful, because it could get ugly fast. Kind of like ENPH got ugly fast. When ENPH broke out of this head and shoulders here, and that important support level, this has come down fairly quickly, very near the target here, and see how the gap has acted as support. This gap goes way back into here, right? That gap acted as support nicely on Thursday, but it gave almost all of it back on Friday, so that doesn't bode well. We've got the target from the head and shoulders just below here, and then of course below that, we would expect to find support. Here where we were at the top of that consolidation, and also, the bottom of the gap. So there is a lot of areas in here where ENPH should find support, but there's potential here for this to come down into the 216 area, and it's at 238 right now. So there's still a fair bit of drop potential in there. Consumer discretionaries looking ugly. Managed to find support though at that June low. That's where we bounced on Thursday, and got right back up through the May low support. Unfortunately, on Friday when it gapped up, it found that downtrend line and behaved off that very nicely and pulled back really hard and pretty much gave back all of Thursday's move. So another one that does not look terribly healthy. Looks like it's going to continue to the downside, but if it were to reverse on Monday, we could see a pretty decent move here. The market is right now. The market is just catching everybody off guard, right? You can't. If you're all these shorts that we're covering early on Thursday, were they shorting again on Friday morning? Maybe some of them were, but I think that a lot of what we saw on Friday was probably bulls who got in late on Thursday. And when it started to turn around on Friday, they're fresh in these positions, and they got a chance to get out at break even while they got out, and they got out quickly. That's probably why we saw such a big turnaround. Then maybe shorts were jumping in. Well, if we get this, the same thing can happen. The reverse can happen on Monday. If the bulls start to take control, any of the new shorts are going to be jumping out. The one thing that there is a little bit of a bright side, or a bit of a silver lining to this, is that this kind of price action, when we get these really big volatile candles, is very often the sign of a bottom, maybe even the bottom. So that is something we should be aware of. The volatility is in a way a good thing, but it's way too early to be calling a or the bottom right now. Okay, industrials. Again, messy, very messy in here. Really volatile. Just could go either way, right? Financials. So, we've been having, earnings season starts with the financials, right? So we had a bunch of those on Friday, and we have a bunch more early this week. But, financials have performed fairly well. They were one of the stronger sectors the last couple of days. So even though they were down on Friday, they were relatively strong. So this is good to see. We need to see strength. We need to see relative performance out of those financials if we're, going to be start looking for a bottom. Let's see. Schwab is one that we've been watching closely, and we should probably continue to watch. However, now we need to, if we have jumped into this thing at all anywhere in this consolidation, we need to be really concerned about what happens next. This is a big bearish engulfing candle. We have earnings. I didn't see Schwab on the earnings list for tomorrow. E-Signal's saying that earnings are tomorrow on this. Oh, actually, no, I think they were on there, weren't they? Anyway, yeah, actually, I think I do remember seeing it on the list now. So yeah, it's going to have earnings before the market opens. So if earnings are bad, obviously this is going to move down, and there's kind of a lot of dead air in here. This could move down a lot. We don't want to see that happen. So hopefully Schwab can impress us with their earnings and turn this back to the upside. Let's see, Tech. Wow, Tech put in like a nasty new low, but look at this gap. Where did that gap come from? That gap is so long ago, 2020. Oh no, 2020. Yeah, 2020. End of 2020, that gap. But look how that acted as support. We've also got, that's the 200-week moving average is right there helping it act as support. Oh, I should get the rest of the moving averages on here. Let's turn some, because I turned some of those off to clean things up a little bit. There we go. That'll do. Okay. Okay. So same again with with everything else in the indices. We need to see it turn up here. We need to see all this support down here hold. Communications sector. That broke down through its lows and recovered nicely, which was important to see. But it stalled out right at resistance on Friday and pulled back. But found some support where it should have as well. So again, it's just so indecisive in here, right? How do you call a direction on that? It's just chopping around in this range basically. So both bulls and bears can find something to look at here. All right, let's take a look at Meta. So that bounced off a support that goes way back. Yeah, there's the COVID low, or no, sorry, the 2018 bear market low, and yeah, that's right. This support level goes back into originated in 2016. So it bounced right off of that. So that's really important. That's actually a really good sign for Meta. If this can hold, because that's a place where it should hold. Look at this on the chart, right? Does that not look like? You kind of want to be buying it there, and that is definitely not investment advice. I don't think you should be buying Meta there, but I could see why people absolutely would buy Meta there. But again, weakness on Friday, and it could very easily come down and test this. If that broke through, all these new buyers who bought there are going to be selling quickly. And if they sell quickly, where does it come down to next? Where's our next support? I guess probably about here, 114. So down another $12 or so. So let's get that one in, because it is entirely possible. Oops, that's not major. It's entirely possible that we see that. Level. Just a bit higher, I think. There we go. Okay, yeah, in around 114. All right, let's take a look at Apple. Zoom in a little here on Apple. Still in the downward channel. Tried to fall out of one of them again and started moving back up through. I think actually for now I'm going to delete off these lines. We keep recovering out of from this line. We keep, every time we drop out of it, we go back in, so that's good to see. But we still haven't managed to come up to the top of that channel, which is important that we do. So, yeah, on Apple, if you're watching this, if this comes down on Monday morning, you want to see it bounce off of this trend line here, the bottom of this channel. And you don't want to see it keep falling out the bottom of the channel. Amazon. So Amazon, Amazon had created a nice little support level here. Fell right out of that on Thursday, went right back up to it. So that was good to see. However, made an almost bearish engulfing candle there. I mean, it's engulfing the entire body of the previous day's candle, and came very near to the low. That's not ideal. This is not healthy looking. This looks like more downside ahead. Will this 101 level continue to act as support? Is it going to break down through there? You need to be watching for that. Netflix, mentioned this earlier because they've got earnings coming up on was it Wednesday? I think it was Wednesday. This tried to fall out of some of these support levels, from the previous consolidation, found some support at the 100-day moving average and bounced really nicely. And you can see, outperformed on Friday. It was only down 1% on the day. So yeah, we really need to keep an eye on this, especially with these earnings coming, because this could really start making a move now. And like I said earlier, this earnings, if they've got good earnings, that could be the catalyst that needs to go and finally start closing this gap. So if it does that, it may be, if earnings are good and if it's up after hours on, I think it was Wednesday, it's kind of thing you might just have to sort of buy the bullet and chase it, or if it gaps up the following day, it could very well be a gap and go. So pay close attention to that. Try and come up with a plan. If you're thinking about playing it, how are you going to react if this does gap up? What happens if? I think the most likely thing to happen here is that, Netflix may, as long as the market behaves, if the market completely crashes down, then Netflix is going to be coming down too. But if Netflix, consolidates in this area until earnings, and then when earnings comes out, you get a big gap up, how are you going to react to that? Are you going to jump in and buy it anyway? Are you going to wait and see if there's a pullback, maybe a retest of this level here, and then go? Make those decisions now when you're unemotional, if you want to play this. Google. So it managed to pretty much stay in a consolidation it's got going on, which is, this former gap area, going back into early 2021. So still hanging out in there. That's good to see. But again, not good to see that nasty red candle, especially the way the 21-day moving average has been acting as resistance. Don't like seeing that. Microsoft. That had a really strong bounce. I remember, Microsoft was, I think, one of the outperformers on Thursday. And, outperformed to a degree on Friday. Now we've come down, we've got a little bit of a support line here, and so far on Friday that held, but that can easily let go. But we've got a couple more potential levels below that. So I'm not totally afraid of if Microsoft comes down a little bit more on Monday. I think that's okay. But if you want to be bullish on this thing, we've got to see some action soon. Tesla is really starting to worry me. If we zoom out here, you can see, we've got support from this June, that was the May low, and with farther back in the past, we came right down to it on Thursday. We Gapped up a little bit on Friday, and put in this huge bearish engulfing candle. This is a really, really bearish candle. Considering how big that green reversal candle was on Thursday, and that bearish candle got even bigger. But we're still right at support though, so man, it's do or die right now for Tesla. Are they gonna, but are they really gonna knock it down before earnings? Or is it just, will it consolidate right there? If the market's down, it's probably going down too. And the problem is that there's a lot of dead air in here. It hasn't seen a lot of, look at this, in our first move, or sorry, this move here. It has had some price action. There has been a little bit of movement here. A little bit of time spent in this area between the 206 support and the 186 or 187 support level. So that one's not so bad. But if 187 doesn't hold, it's empty. It's spent, in fact, we should probably draw a gap in there because it didn't spend any time there. Or, or virtually none. Yeah, there's a gap there. Let's get that in. Right there to there. Oops, I missed. I think that got it. Yep. Okay. So yeah, we'll if we break 187, we got to watch this gap because our next level below that is 167, and that's getting to be pretty far from where we are now, right? But it's a pretty easy move to there, in my opinion. And then it gets after that, it starts to get quite frightening. We probably find a little bit of support in the 150 area. 150 is an important level because it's 150, right? I should actually draw that line in. So that is 150, right about there. You could look for support at 150, but then below that you're at 135. I can't believe we're talking about these numbers on Tesla, but and some people are going to totally disagree with me. Going to say, yeah, everybody's going to come in and buy this, and well, we've been saying that for a while, right? They did come in and buy this support though. They bought this 207 level. They've bought it there a number of times. In the recent past, 1, 2, 3-ish, 4, 5, now 6 times. So this is an important level. In fact, I'm going to make it a major level. And it should support, but it's cracking. It's looking weak. So, yeah, if it breaks, where do the buyers come in? It's a little scary. Because it's so important for the market, too, this stock. Whether or not you're in Tesla, or if you're not in Tesla, you're probably like, oh, what do I care? But this stock is so important to the market. We need to see this support hold. All right. Semiconductors got kind of ugly. The support on those, important support here at around 175. It broke on Thursday. We got back up into it. Yeehaw. And then, unfortunately, we broke again on Friday. That level's got a hold. This starts getting ugly below there too, right? We've got a level down here. Where is that? About 165. Let's get that one in. I know I've been drawing in a lot of these lower levels lately, and I just hate it. Okay, there we are in around 165. We've got to watch for that. And the individual companies in the semiconductor sector are just awful right now. I mean, as you know, there's so much going on there with these bans on equipment sales and whatnot to China. Yeah, it's a mess in that sector. It's hands off, in my opinion. Except that there will be opportunities. We gotta don't take your eye off the ball completely, because there's going to be opportunities in this space once the dust settles. But I think it takes a little more time for the dust to settle. All right, healthcare. Out there was big outperformer this week. I think it was the #1 sector this week. Or relatively, right? I mean, it's still, it's almost you almost not want to be in any sectors right now. But yeah, after losing some support very briefly, went back up, and you can see on Friday it had relative strength. It was the top performing sector on Friday. So maybe if we start to turn green, this is an area that's going to show strength on Monday if we start turning green. Biotech, there's that head and shoulders there. We're starting to make a little bit of an upward channel here. This is kind of an interesting pattern. Coming out of that head and shoulders, didn't come down, didn't even get halfway to the target, and started to support. Couldn't get through that breakout level though, that neckline. But now we might be putting in a higher low. So this could be worth keeping one eye on here, especially if we turn green on Monday, because this could move quickly to the upside. Conversely, if the market starts breaking down, this looks, there's definite weakness in here. We've got a level to work off of if you want to short this, or play it with one of the inverse ETFs in this space like LabD. Because this target is pretty tasty to the short side. REITs. So REITs at a really important support level, cracked down through it, went back up, now right back to it. And we've got all that housing data, building permits and whatnot this week. So that will be important for this sector. Staples. I think Staples had a relatively reasonable week. Messy in here though. A lot of volatility going on. Again, sign of a bottom perhaps, right? A little bit nice rounding going on here. Let's do some of this action. Is that a nice little rounding bottom going on there? We'll see. Does this red candle then turn around now and go back up? Should, right? So yeah, let's see how that, we'll look at that again next week and see if this held. Utilities also have, after a nasty breakthrough of another support level, big turnaround on Thursday, and gave some of it back on Friday, but utilities were the second best performing sector on Friday. Also, I think I mentioned last time, I wasn't entirely sure why utilities were breaking down so much, and I figured it out. There's a company in the utilities sector ETF called NextEra Energy. I'll bring that chart up now. NextEra Energy is a big electric utility company. They own all sorts of electric utility companies all over the U.S., and NextEra Energy's biggest holding is Florida Light and Power, the company that is the biggest electric company in Central Florida. They got devastated by Hurricane Ian. So you can see that is why NextEra was down so much. And NextEra, I believe, is 16% of XLU, the utilities index. So this explains why utilities were down so much. So that's all priced in now. And I don't like catching falling knives, but there are good reasons potentially to try and catch this falling knife. It is still a falling knife though, and you've got to be really careful with it if you're going to play it. So whether you play that in NextEra itself, whether you try and diversify yourself with the utilities index, yeah, now that we know what's going on and we know that all that resolution, all that is going to resolve itself, we should probably see some consolidation in NextEra in this area, which means we could potentially see the utilities turn up. Maybe this is the bottom of utilities. So There it is for what it's worth. Risky play, but might be something there, because I think that, you know, downside in this should be priced in, and it is unusual. Like, you know, I've been saying, it's really unusual to see a very defensive sector like utilities coming down this much, and this last leg down totally explained by Hurricane Ian. That's it. I got no setups really, other than the couple we've kind of looked at a little bit. Like I said at the beginning, this is really kind of wait and see. Watch that price action on Monday morning, or all day Monday really. Before you make any big decisions, because this market, in my opinion, really could go either way right now. A break to the downside could get kind of ugly, but we could also have a really nice reversal. Just depends, what is the mood of the market on Monday morning. And if you can get a sense for that mood, it might be a good play to go with that mood. Right, so I want to thank everybody for watching. Don't forget to hit that like button and subscribe. And if you're a member of the Discord, and if you're not a member of the Discord, you can actually, there's a link below in the description, and you can go there and sign up, and you can you can watch these videos sooner. You can get my daily briefings. You can also come and watch the Ticker Talk a couple of days before it's released. So we've got Ticker Talk sessions every Wednesday, and these market briefing videos on the weekend. So thanks everybody, and enjoy the rest of your weekend.